Hey guys, I'm live with Michael Curtis from Movement Bank. We're going to talk a little bit about some loan programs that this outstanding lender has. Now, Michael, you're located right there in Indian Land, correct?
That's right. So based in Indian Land, South Carolina.
But actually, you're nationwide, and the bank is located, the actual brick and mortar bank is located in Virginia, but Movement Mortgage has bought that bank. Tell us that story real quick.
Sure. So it's been a story in the making. I'll tell you what. Movement Bank, I was with Movement Mortgage, which many people are familiar with, especially in the Charlotte area. Movement Bank came about when Casey, the founder of Movement Mortgage, he essentially bought a bank out of what would be considered pre-foreclosure. So it was really kind of struggling along. Casey came along and he kind of picked it back up. He asked us, our team, to join the bank and really start to help inject good, healthy mortgages onto the balance sheet as other people were able to jump in there and start scrubbing it as well.
Now, this guy is a former NFL player, correct? Tell us a quick 10-second story about how Movement started.
Yes. So Casey, he's an amazing leader, amazing individual, an amazing man of Charlotte. I'll tell you that as well. So he is a former NFL player, and I believe his story is that when he was sitting on a beach somewhere, he Googled how to start a mortgage bank, and that's how the whole story began with him. Yeah. He obviously has a passion for real estate. He was licensed as a real estate agent as well, and he saw that there were a lot of dysfunction in the lending process, and so Movement was really born out of this idea. He took that discipline from the NFL that you've got to have, and he tied that with the real estate side and was able to say, you know what, we're going to take this dysfunction out of the lending process when it comes to real estate, and he turned it upside down.
Well, you've got a lot of background there. And by the way, that wasn't quite 10 seconds, but this is our first time, so I'm going to hold you to it.
I'm rusty.
What's cool about Movement Mortgage, in my opinion, and now you're on the bank side, but still there's some benefits to that, I think, with portfolio, your own money, if I'm thinking right. But one thing, as a person who lives in the greater Charlotte area, we have seen Movement Mortgage, and Casey Crawford in particular, give back to the community in such a way, I mean, almost paralleling with Mr. Levine from Family Dollar, that Casey Crawford, man, Movement, the charter schools and the foundation, it's impressive. Well, let's talk loans real quick.
Well, before we dive into loans, I'll give you this as well. Something that's always stood out to me and how I like to operate my business. Casey has always said that let the light that comes from you be brighter than the light around you, because there is enough darkness in this world. And so everything we do is geared around that. And we can do a whole nother video on that another time. Yes, let's dive into the loans.
All right. So basically, there's been some bank failures in the news. What does that feel like with you? What's the climate? How does that affect interest rates? And, is this a good time to buy a house and get a mortgage?
And that's, that question I'm getting a lot.
You can say it. Go ahead. You can say it. That's a good question.
I was going to say, I've been getting that question a lot. I caught myself because I know you're going to get me. That is something I have getting a question about from a lot of clients and folks just interested in knowing what's happening in the market currently. We have seen a lot of volatility. We have seen a lot of uncertainty, not just in the past couple weeks, but really the past, Roger, what has it been? The last 10 months, 12 months, even longer, as far as what's happening in the markets and what the Fed is doing. Again, we could go down that rabbit hole all day long. However, as far as what it pertains to right now, we've seen these bank failures. And what that expectation is actually doing is that the market, the bond market as a whole, is thinking, you know what, maybe now that we're seeing these dominoes start to fall, these banks start to fall, we could see that the Fed's going to ease up some on how aggressive they've been with their rate hikes. They've hiked rates consecutively multiple times, and as a result, we've seen rates really climb higher. Now we're seeing a tipping point. We're seeing that the bond market is trading in a positive light once again, which is good for mortgage rates. We're seeing the 10-year Treasury is starting to that yield is starting to decline as well. And that's what mortgage rates historically track alongside. And so when we take all that information, what it boils down to you and me and to homeowners around us and sellers is that rates have been coming down. Now, it's not a smooth ride. It's been choppy. It's been a choppy ride down, but it's been this decline we've seen over the last roughly 2 weeks as far as interest rates go.
Yeah, I get updates from lenders. Every realtor's got several lenders, and I'm seeing conforming. What's the difference, by the way, between conforming and jumbo?
So conforming would be essentially just what's considered from a regulatory standpoint to be standard financing. So they take a look at certain areas of the country that say, hey, we think that in this area, based upon the median sales price of homes, that the loan amount should be this for conforming loans. Now, of course, there's always exceptions, and jumbos fit that. So for higher balance loans, higher priced homes in the area, instead of doing a conforming loan, you would do, of course, straightforward non-conforming. So
Michael, let me interrupt you. Does that have everything to do with the price of the house or the price of the mortgage, the amount of the mortgage? What is conforming and what is jumbo?
So it's about the loan amount. So somebody, for example, could buy a $2 million house in Charlotte, and so long as the loan amount is $729,000 or less, then they're a conforming loan.
Okay.
However, let's say if somebody's buying a $2 million house and it's above that number I just gave, that 729, we'll just round up for sake of simplicity, 730. So if it's above 730, we would consider that individual to be non-conforming. And so more than likely,
that would be a jumbo. That would be non-conforming. I got you.
Correct.
I saw what you did. That you put the non in front of the conforming. Okay, so then
that's right.
It becomes a jumbo. So I noticed that the price for conforming is just slightly, is that true? Lower the rate, just slightly lower than jumbo. So in other words, what type of person? Yeah. Tell me the story. What type of person would buy a $2 million house and say only want to finance $700,000 or $1 million, whatever?
Well, that's very subjective, Roger. That's where I was going to go with that. So that's subjective. Everybody's individual financial situation is different. And so in this case, we may have somebody that says, you know what, I've got, $10 million laying around. However, I want to be able to finance so I can put that money to good use. Gosh, I'd love that problem. However, that individual situation is jumbo may be a good option for them. However, you might have somebody, we'll take my wife, for example. She's very risk averse, which many wives are. They don't like a lot of debt. And so for her, being able to see tangibly, and also old school folks, seeing tangibly equity in their home is very powerful. And so you may have somebody that says, you know what, I want to be under that conforming loan limit. And here's what's powerful about it as well, is when you consider a jumbo loan or a non-conforming loan program, typically there's a premium. So interest rate would be a little bit higher. It might be a quarter point, might be half a point. Again, very subjective on the individual's credit profile, their debt to income ratio, which we can get into if we want to. And then, of course, on the other side, with the conforming loans, they tend to be more streamlined. So the idea is that the pricing, the interest rate is a little bit lower on those. And then also private mortgage insurance.
Wait, slow down for a second. Yep. First of all, to all my subscribers, Michael Curtis from Movement Bank, he speaks a different language than the common people. I'm a seasoned real estate professional.
Yes.
And yet some of the language that Michael Curtis uses, we don't all get. So when he just threw in the word streamlined, what is that? What does that mean?
So streamlined, that's a Michael Curtis special, that word. So streamlined simply just means that we're taking something that is not considered more complicated. A good example I like to give is, for example, car insurance. Let's say, Roger, you decide that you're going to buy a red Corvette and you're going to trade in your Honda Accord. No matter how good of a driver is, you could have the best driving record in the whole world. You're still going to pay more in car insurance for that red Corvette than that Honda Accord. And the reason for that is the vehicle. Same concept applies when we talk about non-conforming jumbo loans and other loan types that are non-conforming versus a conforming regular mortgage. The way that the regulatory bodies look at these is that this is more risky. This is more risky on this side with non-conforming versus with conforming. And therefore, that's why you see these differences. I like to say streamlined because if you go conforming, it's not going to be the same hoops that you may necessarily jump through with a non-conforming, a jumbo loan, or programs that fall underneath that category.
So again, what is streamlined? I still don't know what that means.
Streamlined is just simply, look, you're going to get into a simpler process. It's going to be A, B, C, and then you're going to close. That's what I consider to be streamlined. Okay. While on the jumbo side, there may be more quirks. There may be more things needed when we get into underwriting. We may be a longer process. Streamlined could mean that in conforming, we may be able to close in 2 weeks, depending on your financial situation. While a non-conforming, you could have the best financial situation, but we're tied to this program, and it's maybe 45 days. So that's what I mean. Is it could just be differences in that.
Yeah. So movement has been notorious over the years for getting stuff done fairly quickly. You have this beautiful new building in Indian Land, just south of Ballantyne, across the state line. And is it true that you have underwriters there in the building, or where are the writers?
Yes. So of course we still live in that post-COVID world. So a lot of people work remotely. A lot of people that I know, they still work remotely. However, at that building and the big awesome buildings that we got down there, we do have underwriters there. A lot of these guys and gals, they come in, a couple days a week and then work remotely a couple days. I was there last week checking in and just loving on some of them and thanking them for a loan process that closed recently for me. And so they're in there. They're good people. People hear the word underwriter, or they hear the word appraiser, and it kind of gives them the goosebumps. But they're our neighbors. They're good people. And so we got a really good crew in there.
Yeah. So my question, I guess, really is how closely do you work with an underwriter to make sure that a loan can get done?
So we're with them right once we're through pre-approval. And that could be whether a house has been found or not. So once somebody comes, Roger, you have somebody reach out to you, say, hey, I don't know where to start. I want to buy a house. Then you connect them with me or a lender in the area that they're buying in. And then what we're going to do is we're going to get some financial snapshot. I call it financial vital signs. We're going to see where you are with your credit income assets. And then once we've done with that, I can let you know and let that home buyer know, okay, here's what we're looking at. And at that point, I'm recommending let's get pre-approved. And that's where the underwriter comes in. You're not going to be communicating with the underwriter. I'm your mortgage advisor. So you're going to still talk to me, but I'm going to now be working with the underwriter for the loan program that we're going to be being pre-approved for, whether that be a non-conforming or a conforming loan.
Okay. Now I'm hearing from say Bank of America a few weeks ago. They've got a program for grant money. I think of 10 grand. I've Truist Bank. I have a guy that has a program for like $7,500 grants, and I'm hearing this across the board. Is that related to CRA? And what is that? And then do you have a program similar?
So the Community Reinvestment Act, right? CRA, many banks, again, it's above my pay grade, so I couldn't get too much in the details, but many banks are participating, whether willfully or not, in the CRA because they're being told to by regulatory bodies. Bigger banks, of course, the expectation is they're going to be doing that. We do as well. Now, we're not the biggest kids on the block, though. So
first of all, Michael, I'm going to interrupt you and take it from a consumer side, not just a real estate professional side. When I think I remember the day I had money in Bank of America. I walked in there one day, right up there by Waverly, and I said, "Hey, give me my money. I'm going across the street to a small bank, a North Carolina bank. I'm tired of it." Same thing with Wells Fargo. Not long ago, a few years back, we refinanced. And I said, "Anybody but Wells Fargo." Anybody but Wells Fargo. And I know a lot of lenders. I went to a small guy and he, had a good experience. And then he sold it to guess who?
Wells Fargo.
I was so happy when I paid Wells Fargo off. Oh, yes. So now Movement Bank is a much smaller entity than B of A or Wells Fargo. And they both have big presence here in Charlotte. I've helped people buy houses that work there. But how is Movement Bank different? And then tell us about if you have a program that's similar for down payment assistance.
So the way that we work, now we are brokers. So I work for Movement Bank. And what we're going to do is we're going to, depending on the needs of the individual, be able to connect them with the loan program they need. We just mentioned jumbo, right? So if we're having somebody that needs that, certainly we can find a lender. I work with multiple lenders that can do that. The exciting thing that we're proud of is that we work with many lenders that are going to service their own loans. So, for example, my favorite would be Movement Mortgage. Being a Movement Bank employee, of course, Movement Mortgage, I can go down there. I was telling you earlier, I can go down there. I can pick on them and check on how things are going. So they're a great resource and great relationships with them. They're going to service their own loans. Which is really powerful, especially if when we think about the confusion between servicing and what happens to somebody's loan and who do I need to reach out to. we're gonna make sure that the people we're working with, they're going to be serviced and stay with that particular lender. And so that's,
do you have a program similar to that 10,000 from B of A or that 7,500 from Truist?
correct. Now, we're a smaller outfit, so what we do is, as a broker, I'm a preferred lender with agencies. So think of, for example, here in our area, North Carolina Housing Finance Agency. They have a program. It actually just went from 8,000 to 15,000. So we're going to be able to get down payment assistance for an individual for NC Housing. Dream Key Partners is another. House Charlotte is another local one. South Carolina Housing. So these are agency programs that we're going to work with to connect home buyers to, whether it be first-time home buyers or, in some cases, repeat buyers.
Okay, so question then, draw a picture of that type of person. What's the profile? Credit score, mortgage interest, do they have to pay MI, down payment? Paint a picture of that type of buyer.
Sure. So the good news is with these types of agency programs, they are understanding that a first-time home buyer, which are the ones that mostly use these programs, are not going to have established credit, or the credit's going to hit some marks. If you've been sucking wind, you've made a mistake in your life. I have, Roger has, we all have, right? So you don't have to have a perfect profile in order to access these programs, and these programs understand that as well. The expectation I set is that if you can pre-qualify for an FHA mortgage, Federal Housing Administration loan program, which we have access to as well, we should also pursue and at least look at what the option is for you to do an agency program along with that.
So what's minimum credit score? What's the down payment typically?
Yep. So 640 would be that minimum threshold credit score to be able to access many of these programs. Some go lower. Some could be 620, but anywhere between 620 to about 640 is what you can expect.
Okay. And how much money should somebody have access to before they call you? I'm going to give you a number out here in a moment.
Sure. Now, these programs, they tie into a regular program. So think of it like a highway. You got a 4-lane highway, conventional, FHA, VA for our veterans, and USDA, right? USDA can be the shoulder. Not many people are using USDA. But then off of these programs is little offshoots and things we can tie into them. So conventional would have a minimum required 3% to 5% of the sales price, FHA 3.5%, VA is 100% financing, USDA is 100% financing. All of these, what we would do is we would take the agency program and we would then tie it to the program. So 3% or 5% assistance would tie into conventional, or 3.5% or more for the FHA program. So that's how these programs would work.
Well, you mentioned North Carolina. What is it? NCHFA.
Yep, North Carolina Housing Finance Agency.
Right. Now they've often had down payment assistance, as does House Charlotte. But so if somebody needs 3.5% for an FHA loan, can that all be had from one of these programs? And how do they get it?
It could be. You could get up to 5%. So you could even have more in some cases. Now, one thing I do tell people, I actually neglected to explain this when you're asking, but what money do I need to have out of pocket? What do I need to be prepared for in hand before we start this process, right? So to get the process started, again, just financial vital signs, you don't need any money to do that. We're just going to see what we need to do. And then as your mortgage advisor, I'm going to walk you through the next steps, whatever that timeline looks like.
Okay.
However, down payment assistance is just that, down payment assistance. Roger, you're familiar with this as well. There's still costs to do a loan, closing costs. So you want to be prepared for all those costs. Again, I can explain and show what that breakdown can be through getting the financial vital signs so you can see what that looks like. Closing costs could be attorney's fees, any lender fees, appraisal. These are all, homeowners insurance, whoever you select for that. So all these things would be costs you want to be prepared for.
Question, Michael, what is an origination fee?
Oh, that is a good question. And I'm going to throw that out there at you. So origination. So you'll hear lenders use words like points, origination. Essentially what it is that's I've seen it defined differently depending on the lender. So really get into this with your lender so you understand it clearly. Origination could be the lender's charge just simply to do the loan. That's it. So, for example, with us, we have a flat underwriting and processing fee. That's it. We don't charge any additional origination on top of that. Some lenders may have additional costs to do that. Points would be points to buy down your interest rate. Now, it may make sense to buy down rates.
I want to stay back here on this.
Yep.
And let me tell you, I got licensed, 20 years ago, but something happened around 2008. I wasn't selling houses anymore.
Yeah.
And there's been a lot of talk about that whole thing with the bank failing and so on. So my question is, I would see guys that were brokers, and a broker means, right, that you can go to movement mortgage, you can go to this, you can go to that, you can go to that, depending on what's best for the client, hopefully. But I was seeing guys, and I was when I was fairly new in the business, saying, hey, they would mark up those rates and just roll it into the mortgage, right? And a lot of people didn't know, first-time home buyers. Tell me that story.
Yeah, so you do want to be able to look at that. And what I tell people, just an education piece first, is that interest rate versus APR. This is a really good indicator because you get a document. Your lender should be going through that document, that loan estimate, line by line, and explaining to you what this is. Okay. If you get a document and you've not had it explained to you, excuse me, a good place to look is your interest rate and your APR. Now, if your interest rate and your APR are relatively close together, then you know that you're not paying a lot because the APR is like an overall total charge or a percentage showing the charge to do this loan. So credit cards, for example.
That would include the origination fee in it.
Correct.
Right? So if that number, if that APR is much higher than the loan rate, that's okay, good.
Exactly.
Well, good, and I'm going to cut you off here, Michael, because I'm convinced that the name that I've picked for you, we like nicknames around here, that the name that I've picked for you is probably pretty accurate.
I'm ready.
I want you to take your hands. I want you to put them on your chest like this. Okay. This guy, looking closely at his face, this guy is Michael Clark Kent Curtis. Go ahead, pull it open.
I should have had it on there.
I'm just saying. So Michael Clark Kent Curtis, to work your magic at Movement Bank, what's a good phone number for my subscribers to call you at?
Michael Clark Kent Curtis. Don't give away my secret identity now. That my number is 803-389-5256.
Give it one more time.
Oh, sure. 803-389-5256. And really, any questions that anybody has, as you can tell, I love what I do. So any questions, feel free to reach out. We can just get some financial vital signs and put you on track with where you want to go.
Now, this is our caveat, and I'll tell this story very quickly. Michael and I became acquainted years ago when one of the local campus pastors at Elevation was buying a house, and then he was getting a loan. And Michael and I became acquainted there, and I was really impressed with his level of care and service. And then in our industry, real estate agents and mortgage people, we have events and all that. And Michael has shown a lot of care to me personally, traversing in that and showing me a lot of respect, probably because I'm an old guy, but also because I am a seasoned professional. So I can assume that Michael Clark Kent Curtis will give you lots of good coverage and lots of good service and care. So give us that number one more time, Michael.
Sure, yeah. And before I give it, I just want to say that I just want to grow up to be like you, Roger. So that's what it is. I'm all about that. I think you're a trailblazer, and I'm grateful to know you. But my telephone,
as our pastor said recently, when his kids accused this 40-some-year-old pastor of being old, he said, "Hey, old is the goal.
Old is the goal."
I'm happy to be old. All right. I'm going to give the number. He won't answer a straight question for me. I'll give his number, 803-389-5256. From Movement Bank, Michael Curtis, thank you so much for your time today, my friend.
Thank you, Roger. I appreciate it so much.
All right, guys. Hit subscribe, like, share, all that stuff that the kids do, and we'll see you in the next video. How do I turn this off?